Okay, here we go. How we going? How is everyone? We're up and running. It's been a crazy night, that's for sure. And all of yesterday. We've got a lot to talk about, a lot to review and go over, which is exactly what we're going to do today, and exactly what we're going to run through. Can everyone just let me know if you can hear me all right? Keep me in the loop. And once I get some actions in the chat here, we'll start to dive into the real stuff. We got anyone over on TradingView? Can you guys let me know if you can hear me all right? Good morning, amazing people. Hi, Nick. How you going, mate? Nick, I think you're the Nick that reached out to me on Discord a little while ago. I'm not sure. If you are, I tried to send you a message the other day, but it wouldn't go through to your Discord. I'm not sure why. But if that is the right Nick, I'm not sure if it's the right Nick. But good morning, mate. Good morning. Welcome. Yeah, it is. Yeah, okay. Yeah, I tried to send you a message on Discord, but it says because we're not in the same Discord channel anymore, I can't actually message you. So, yeah. Joel, how you going? It's great to see you, mate. Welcome. Hello. Fred, how you doing? I think that's Fred. Bachelor. Bachelier. Hello. Welcome. All right, good. Everyone's coming in now. We'll give them a little bit of time. We'll give everyone a bit of time to come in and say hello, and then we'll dive into everything we want to run through today. Hi, Stephen. How you going? Good to see you. Welcome. How's everyone feeling? How's everyone reacting to? Well, I don't think I even need to mention it. To what's going on at the moment? How's everyone's decision making, and how are we all feeling about it? Mohammed, hello, welcome. Hello from Mexico. Nice to see you again. Hello, Rolando. How's Mexico? How's the weather? It's good to see you, mate. It's good to see you. Thanks for tuning in. It won't be too long before we fully dive in here. We'll just give it a bit of time for everyone to come in here and everyone to get involved. Is the volume all good? Everyone can hear me fine. Everyone can see me okay. If there's any issues, please just yell out and we'll get it fixed before we dive into the joys of trading, especially during times like this. But I do have a lot I want to cover today. It's warm. There you go. Expected. I do have a lot I want to cover today in terms of my trading the past couple of weeks, what we've been looking at, and then also what the plan is through next week and into the future now that a war has broken out. And there's a couple of topics I want to touch on about how the markets are reacting and then how we can expect it and how we can, as horrible as it is to say, how we can profit from the market's reaction during this bit of a crazy time. Sounds good. Thanks, Horman. Thank you very much. Awesome. All right. We won't take any longer. So we know the usual process. We dive into the Discord questions at the start. Now, there's only two, and they're very similar in matter of fact, and they're actually both on the topics that I really wanted to cover today. So that's going to work quite nicely for us. I had a message from Ronica. Ronica, if you are here, say hi. Which is a great question saying, do you think it's advisable to be trading at this time when there is war? And then Dave also messaged saying, today was risk on and gold tanked. Could it be banks are pushing price down to get a better entry before the market goes risk off? Bit crazy, okay? So these are two related questions. These are two related questions that I want to cover. Mike, how you going? Be thankful for the warmth. It's minus 20 degrees here in Calgary. Wow, that's cold. Yeah, no, that's too cold for me. Okay, so Ronica, first of all, do you think it's advisable to be trading during a war? Look, what I will say is it brings a lot of volatility. and depending on the type of trader you are, volatility can be good. So depending on your strategy and what your process is, I'd say yeah, dive in. And then talking about the whole risk on, risk off with Dave, who asked, I was risk off for the past, I want to say 2 weeks. The past 2 weeks, I've been risk off, and I've addressed that multiple times, not only in our live trading rooms, also on the Discord. And for people who talk to me personally about trading, you would all know that the past 2 weeks I have been very risk averse, very risk off during the uncertain times of whether Russia were going to invade or not. Now, all the facts were pointing towards they were going to invade, and it is going to be a big war. However, it wasn't guaranteed just at that point. So what did we see? We saw uncertainty. And when we see uncertainty in the market, that's when I like to go risk off, because no one knows which way it's going to go, how the market's going to react. Then, yesterday at around 1 p.m. my time, Putin went in and they invaded, and they've gone in, and I'm sure you're all aware of this now, and you've all been watching the news and everything that's been happening. But now that it is confirmed that the war has broken out, and we now have a war in Europe once again, which is horrible to think about, but it's the fact. We do have a war in Europe. We are no longer uncertain. We are no longer uncertain whether a war is going to break out. We're no longer uncertain on whether Putin is going to invade Ukraine. All the uncertainty in the market is now turned to certainty. We know exactly how it's going down. We know that he's gone in, and we know there's a war in Europe. And that then removes all uncertainty from the market, and we go back to certain markets. So the past 2 weeks, you would have seen a lot of uncertainty. You would have seen gold price rising. That's what happens during uncertain times. Gold, safe haven assets, gold, silver, commodities, they tend to rise during uncertain times. We now have certainty. Okay, it is confirmed. He has gone in. We are certain that there is now a war. That's when the safe haven assets will take a hit, as we've seen on gold. We've seen the hit that it had yesterday. And usually, now that we're certain, you're probably going to see over the next few months stocks like the S&P 500, like the FTSE, start to rally a little bit more. You see, during the invasion, we do have big slumps and big shorts that come in and big drops. But then once everyone realizes that, okay, we're no longer uncertain on what's going to happen, we see a nice little bounce back, which may happen. No, don't take that as financial advice. That's not financial advice. I'm just basing off what we've previously seen. So I'm going full risk now. I'm back into trading. While most people look at this as quite a worrying time and a time to step back, we now have certainty in the market again. I'm going back to full risk. I was risk off during the uncertainty of whether or not he was going to invade. He's invaded. I know what's happened. I know what's going on, and I know what it's going to affect. We look at, wheat supply. Ukraine supply Europe with like 10% of their wheat. That's going to take a hit. We've already seen oil prices break $100 a barrel, $100 a barrel. We know that Russia provide a lot of crude oil, a lot of gas to Europe, and coming into winter months, as these months carry on, how's that going to affect the market? Are gas prices going to rocket the whole way through Europe? Probably. We've got to just look at the different effects, and then the sanctions coming in from the United Nations countries and from NATO. They're not only going to hurt Russia, they're also going to hurt those countries too, because there's a lot of money that they're halting, a lot of assets that they're freezing. So there's a lot of different things going on. But one thing we do know is it's certain that oil prices are going to rise. Why? Because the main oil supplier is at war and being sanctioned and can't move it. Wheat prices will probably rise. Why? Because the country that provides 10% of the wheat is being invaded. Gas prices will rise because it's at war with who's supplying the gas to them. Like, there's all these different things, but what we do know is it's certain. So we don't need to be risk off anymore. We don't need to be risk averse. We can start pushing forward and go back into our usual trading routine during what is quite a horrid time. Sorry, I missed a couple of questions there while I was talking. I hope that made sense for everyone. If you have any questions about that, please send them through right now, and we'll get it all out on the table before we dive into the charts and we have a look at some opportunities and some of the trades I've taken over the past, well, not only yesterday during the invasion, but also prior in the week where I had a low risk trade. And then also the setup moving into next week. We'll have a discussion about that. But if you have any questions about that whole thing and the certainty, uncertainty, or if it made sense, just give it a thumbs up, or I can dive in further on what I'm talking about there. Adelaja, I hope I'm saying that right. I hope I'm not butchering your name. Still a struggling trader, but I love trading and will win someday consistently. Thanks for the webinar, Ade from Nigeria. No worries, mate. It's great to see that you're striving and you're still working for it. Why is Euro Swiss franc so low? I was surprised to see this yesterday. Euro has dropped and seems to be dropping against the Swiss franc, or is war related? War is related, definitely related. I'll run through the charts on everything that's happening now. Euro Swiss franc hasn't dropped too much in line with everything, I guess, with how it's going on, but the euro definitely did weaken because there's a war in Europe now, and we don't know how long or how big this war is going to be. But we do know that there is a war in Europe, so the euro is going to be damaged. And with the sanctions coming through, as I said, it doesn't just hurt the Russian ruble, it also hurts the euro, the pound, the US dollar, the Aussie dollar. It's going to hurt them all because the sanctions don't affect just one country. It affects business, international business. And, you know, the Russian economy is the 11th biggest in the world. Like, they have a major impact on trade worldwide on a load of different assets. So halting and freezing all of them will hurt everyone else and will hurt the other businesses too. So not all good news not any good news when it comes to war, but in terms of the way the sanctions are going, it doesn't just hurt Russia; it's going to hurt the economies worldwide, and we'll see that firsthand. You'll probably notice today waking up, or for a lot of you, it will be Thursday night there, but here in Australia, you'll wake up and fuel prices are going to be up a lot higher than what you're used to because of this. So it's worth to keep an eye on. It's worth to have a look at. Nick's is spot on. Awesome. Thank you, mate. All right. I'm not sure if my TradingView chat is broken or it's just really quiet over there. But if you are over on TradingView, just send me a thumbs up to know that my chat's not broken. And if I don't get a thumbs up in the next 3 minutes, I might have to refresh that just a little bit. But they were the Discord questions, and it's kind of the topics I wanted to cover anyway. And then I want to have a look at oil, and I want to have a look at gold and show you exactly what's moving, where it's moving, why I believe it's moving that way. And then also I did take a trade on gold yesterday as we went risk on whatever. Hey mate, Joel's still working. Bradley, how you going? All right, awesome. A little bit delayed, but we are still working. That's the main thing. There is a bit of a delay when I'm speaking. King Dom Management Group. Hello. How you going? Welcome. Okay, so what I'm going to do is I'm going to jump into the charts and we're going to have a look. This is Euro Swiss franc, as I was just being asked by Adi there. Couple things I want to cover. Couple things I want to have a look at. All right. The first one is the Russian ruble. This is US dollar to the ruble. As you can see, it's rocketing because the ruble's worthless. It is getting very low. Russian stock market tanked yesterday for like 41%. I think it closed down 41%. The stock market as a whole dropped 41%, which is, I mean, that's wiped off billions of dollars, which is what the sanctions were meant to do, and what the sanctions wanted to do, and why everyone's pulling their money out of Russian stocks. But in return, it's made the ruble very, very low. So for one Aussie dollar, I believe, one US dollar will get 85 Russian rubles. And as you can see over the past, this is the daily chart. Yesterday we had a large spike followed by a bit of a wick. But even the past week, the money's been flooding out of the Russian ruble. So it's something to keep an eye on. It's not a pair I trade, and it's not a currency I trade, the ruble. But it is something to be aware of, that it is tanking quite heavily. So if you have a look where we have currencies that have like a lot of Russian investment, There's a lot in London. I can tell you that there's like a lot of money, especially in the property market in London, from Russian investors after the UK introduced a pact a few years ago that you could get residency if you brought a load of money with you and invested in the UK. You could get permanent residency. There was something like 2,500 high equity Russians that went and jumped at that opportunity and now live in London. There is a lot of Russian money, so that might affect the pound if they decide to start moving that, or if the UK government freezes those assets. We might start seeing a bit of weakness in the pound. We're already witnessing some weakness in the euro. There's a lot of different moving parts that we need to be aware of when we're running through this. What I wanted to look at was gold. And I saw someone talking in the Discord earlier about why on earth did we have this huge wick? Like, war equals rising gold. Gold rose, and then, I mean, as you can see here, it just tanked. And trying to get an understanding of that. So I'm going to explain. Now, obviously, it's not going to be spot on, but why I believe this has happened. And it's the same thing I was talking about, the whole risk on, risk off. Okay, the past 2 weeks, 2.5 weeks, we have seen a gradual rise in gold. And when I say gradual, I mean this still has gone up $100 an ounce. So that's still quite a lot. So even though it's been slow and steady through the days, it is still a large climb. And this was during what I like to call the uncertain time. Okay? The uncertainty, when we have uncertainty, safe haven assets are the place to go. That is where everyone goes. And if all the money's flooding there, that is where you're going to see it. So during the uncertain time of whether the Russians were going to invade or whether the Putin regime was going to invade or not, we could see a lot of money flooding into gold, flooding into oil, flooding into, I think silver had a little rally. Like, there's a lot of different places where people were going and putting their money. Then we had the war be announced, essentially, and when every letter really. When I'll jump down in the 4 hour, when the war broke out, or when they declared war, it was around here. It was in here somewhere. I think it was just here where they declared it, and you can see the rally that we had from that instantly. I caught a bit of this rally. I got in about here and then ended up getting out around here. Just a quick little scalp in the rise. Didn't put as much risk as I wanted to. I wanted to go really heavy. I bought about $160,000 worth, obviously trading on margin, and then took off the profits to close to about $600. But I wanted to go heavier. It'd been so long since I traded news like this. I was a little uncertain, and plus being risk off the past few days, I didn't go heavier. All in all, I mean, I made profit from it, so it's kind of like it's okay. It doesn't matter. Like, the main thing is that we benefited from the trade. The trade was good. The analysis was good. But as you can see, as we moved into the night, up here, so as we're getting my time, this is now getting to like 2 a.m. my time, so I'm fast asleep by this point in time. When the US stock market opened, we had this massive climb down. And I think this is the market now realizing that we're no longer in uncertain times where we need to climb. We're no longer flooding our money into gold because we know what's happening. We know what the sanctions are going to affect. We know where the war is. We know what commodities it's going to move. We might find better places to put our money other than gold. Now, while your theories might be, okay, the banks are shorting it to get a better entry point, maybe. But I also think this is just a lot of people realizing that they can move their money into better places and they don't need to be hiding in gold anymore because there's no more uncertainty of what's going to affect what. We know exactly what's going to happen. We know exactly where the war is, what commodities is going to affect, what the gas prices are going to do. Like, while there's still obviously room for error, we have a very rough guideline into what's going to be affected during this time, which I believe why that money's come in. And a lot of the people I did see in the Discord as well saying they were shorting the S&P 500. Let's go SPX. Sorry, I'm messing up here. They were short in the S&P 500 and it didn't do what they expected it to, and they were a little confused why. That's the exact same reason, guys. We had the uncertain times right here. We had the uncertainty. It was coming down. We were unsure on what it's going to do. Guys, we're now certain. It's time to rally. And if you have a look on the daily chart here, you can see that we did have quite a large bullish candle, but we've had the uncertain times as we pushed down the past few months. Have we bottomed out? Potentially. I think we've potentially bottomed out in the S&P 500. If you have a look at all invasion days over the history, when we look at the Gulf War, when we look at the Iraq War and everything like that, the invasion, we had a strong drop, the time of uncertainty. Were we going to invade? Were we going to get in another war? Stocks came down. I don't want to be in if we're going to war. We went into war, rally. Everything rallied. Oh, okay, damn it, wars happened. What now? Okay, let's go buy all the tech stocks that manufacture tanks. Let's go buy all the all the big. You get where I'm going. War creates money. You need armor. You need guns. You need military equipment, which is some of the most expensive stuff in the world, and lots and lots of businesses creating them. So once we do get confirmed that we have a war on our hands. Sorry for laughing there. I'll reply to that comment in a minute. Once we do get confirmed that we have a war on our hands, then we can start rallying. Steven says Russians holding a lot of gold potentially. I can see a lot of the Ukraine economy, a lot of the Russian economy, and everyone going into commodities I've already seen in Ukraine that everyone's emptying their bank accounts, going into cash. But I think anyone that does have access or is able to go and digitally buy gold or stuff like that in assets, they will be, just because it will hold its value probably better than a lot of the currencies during the war. But we'll see what happens. The reason I laughed is Persefinance just said, your mustache looks like a Cheeto puff, which is nice. Thanks for bringing some laughter to such a dark time. Appreciate that. All right, so that's the S&P 500. I saw some people saying they were quite surprised. Would you buy or sell the Nasdaq US index if war happens? I'd buy. Currently looking at the market, I'm looking at buying long term, not scalping, not doing a day trade. Long term, I'd buy. 100%. I'm looking at filling positions in the S&P 500 into next week, depending on the sectors and what I'm looking at. But yeah, for me, definitely looking at going in on the S&P 500. Also, the FTSE, I think the FTSE could do quite well. Once again, depending on the sectors and where that Russian money is. But I think the FTSE could also find a rally. So we had gold, we had that spike that we were just talking about, and we made a little bit of money on it. Nothing too good. That wasn't on my 5ers account. That was on a personal account that I traded that. And then I had one trade over the past week. I'm actually going to go ahead and open up that so I can show you the trade history. I can show you the trade history. Once this gets open. Alrighty. So, trade. We're going to look at custom period, last 3 days. Right here, we had two trades, right? We had a sell on Great British Pound Swiss franc and a sell on Great British Pound CAD. And I actually discussed both of these in the Discord, because I said to everyone, guys, the Great British Pound is looking weak earlier in the week, and I was looking for shorts on it. Now, Great British Pound CAD was the best trade, and I'm going to run you through exactly what my trade was and how I went about it. Great British Pound Swiss franc was a good all-round setup, only I misread one thing, and it wicked me out before heading to my take profit. But it happens. It's part of trading. All right, Lucian, good to see you, mate. Welcome. No worries for being late. Never apologise, mate. Great British Pound CAD, I mentioned this earlier in the week. I put it out there with a Great British Pound US dollar, not signal, but analysis, and saying, hey, look, all of these pound pairs are looking very weak. we could see some potential here. And this is what I exactly saw on the 4 hour here. Is we had this steady trend line come up here. We had a bit of demand supply area. We're kind of deciding which way we're going to go. Managed to break it, get another push up. And if you like trading flag patterns, I mean, there you go. You've got a pretty evident and clear flag pattern right there. And then as we pushed out, we hit the roof. Right? We hit the roof. Like, we're not going to go much higher than that. It's really struggling. We already struggled here. Never mind getting up here. Like, we're going to struggle even more. And then we had this beautiful little push down. If you look on the 1 hour chart here, you can see that it was quite a nice rally all the way down here. And when we saw this push down, I was like, okay, this is great. This is great. This is an opportunity where we're seeing a lot of bearish power. We're seeing a lot of people want to sell this asset more than they want to buy this asset from this range. There's a lot of orders pushing this price lower. Fantastic. That is exactly what I wanted to see. And then we had another amazing thing. Just as bullish, if not stronger move, you can see like on the 15 minute, if not a stronger move in a short amount of time, back up into that area. That was fantastic. That was one of the nicest pullbacks and the arches pullback, which I talk about all the time, that I've ever wanted to see when going in a trade. So it was a matter of looking, okay, where exactly is this supply zone? Where exactly is the area that I want to be shorting? And it's in this kill zone that I like to call. Some people from last week, they call it the order block. I've just always called it the kill zone. It's in here. I want to see a reversal pattern on the 15 minute in this area. Why? Because we pushed, we broke a lower low, we broke market structure. We're signaling that, hey, I want to go lower, let's go lower. Then we had an immediate push up back into the supply area right here. So we jump in on the 15 minute and we go, okay, let's look for our entry point. And it was as we get another market structure break. That's what I wanted. That right there was where the market structure was going to break. Actually, I believe I might have even entered a little higher on here because we created a higher low just here on the 15 minute. And then as we came back in, that would be the entry point. Now I can confirm that on our history tab here. It's Great British Pound CAD. Our entry point was 73304. If we come here, is that around 73304? Oh no, okay, so it was, yeah, just under this wick here. That was our entry point. Our stop loss was just above the recent high, right there, above the resistance zone, and my take profit was just coming into this zone here. That was the overall trade, as you can see. And if I go into a Great British Pound CAD chart, you can see that shown right here. Oops, excuse me. You can see that shown right here. That is where we sold, and we held it all the way down to take profit just as we got into this demand zone right here. Right there, that was our overall trade. Could I have held longer? Probably. As you can see, it did kind of rally a lot longer. But I was happy I wasn't sure how it would react around these areas, especially with this being kind of a big area of just mess. I wasn't sure how it was going to react, so I was quite happy to take my take profits there, which is it. That was the only winning trade I had this week. The only other trade I had this week was on Great British Pound Swiss franc, which is very similar setup. We had to push down here. We come back up into that zone. This top wick stopped me out. I moved my stop too short. I should have been looking up here, and then we had to push down. I looked for a tighter stop in here because the risk to reward ratio wasn't going to be great if I was aiming for that zone. Stopped me out and then pushed lower. But I had very, very little risk on that asset there anyway. So that is okay. All right. There were my two trades. We're on the table. That was it. They were the only trades. We finished with $133 profit for the week. Okay, on the bootcamp account that we were trading. That was it. Sorry, I missed a fair few of your. Just found a magic indicator that fell in love with, which is good. Awesome. I'm not a big fan of trading indicators. I prefer just trading price action, but fair enough. It helps you trading. I hate this market volatility with war. Yes, it is. I think we're going to see more certainty now. I think the volatility is going to be good because we can kind of expect it to follow price action now that the uncertainty's left the market. Jordan, did you go over Aussie dollar, Japanese yen? I haven't. Do you want me to? Have we spoken about Aussie dollar, Japanese yen? Is it something you wanted me to cover with Aussie dollar, Japanese yen, Lucian? Let me know if there's something you wanted me to cover. I haven't done my actual trading analysis yet of all the pairs. It's just been a hectic morning with how everything in the world's unfolding. But the beauty is we're getting these long moves, especially in the euro. Like I can't know who was talking about the euro. Ade was talking about the euro. And as you can see, as we pushed down here, we've got a massive supply area in US dollar, euro US dollar. So if we manage to get a push up here and then a shunt back down, I mean, I definitely think it could happen. But we'll have to see. We'll have to see how that all goes. Curtis says, yes, please cover Aussie dollar, Japanese yen. Okay, people want Aussie dollar, Japanese yen. You missed a good entry point. Okay. Depending on the time frame you trade and everything about it, I'm not sure. Just because I was in other trades and I didn't take it, you want to explain to me a little bit more on what you were looking for exactly? I'm assuming your good entry point was a short over the past day, as you were saying yesterday. Yeah, in here you missed a good entry point. Nothing I would have the 4 hour. Okay, so I'm immediately assuming you were looking to get in like somewhere up in this area and then short it. That's what I'm seeing. Now, there's a reason I didn't look for this. The reason of that is because we didn't break structure. This right here wasn't broken, so we were still setting higher lows, which is the reason that I wasn't looking to short in this area up here. Even though we did have a nice push down, we didn't break the structure. So I wasn't really looking to reshort this area. And as you can see, it took a long time. But yeah, I guess you could have had it. Took a little, yeah, you could have got an entry point right up here, which would have been right at the top, all the way down there. But it wasn't a trade I was looking for. It didn't fall into my trading plan. We didn't break the structure there, but yeah, definitely could have. Definitely could have made a lot of money on that trade with a good risk to reward ratio. Euro US dollar, yep. So we're looking at the same. Great British Pound US dollar looking very much at the same as Euro US dollar. You know, if we get back up into this area, depending on how it reacts, we definitely could see another push down from that price. US dollar Swiss franc was one that I was looking at trading, but I just didn't get the entry point. It didn't come as far into that zone as I wanted it. So you can see as we pushed up here, we had this rally here. And as we pushed up, we did break a higher high. Even though it's wicked, it's still a higher high. There's prices up there. And then we came back down into that demand area, which is down here. But as you can see on the 15-minute, we literally just wicked into it just momentarily right here. And that was the only time we touched that demand zone, which, I mean, you could argue shows that it's an extremely strong demand zone. But also, I like it to kind of come in, group a load of orders, get a load of buyers, and then push higher. As we came in, then we would have set the higher hope, and we could have had an entry point here with a stop here. But as I said, I expected it to come further into the demand zone, and then it ended up running. The war helped that. Don't get me wrong, the war helped rally that price. Euro Great British Pound sitting in a range. Could potentially look for shorts coming in. We did have a push down. That wick did break a lower low. We've pushed up. We've got a bit of a trend line here showing a bit of a pennant coming in. If we did set a lower low there on a 15-minute and a pullback. If we can maybe get below there, we could look to short to the bottom side of this channel on Euro Great British Pound. But we'll keep an eye out. We'll see what it can produce for us. I'm actually going to flag that one. That one's a potential trade. Bit all over the shop. US dollar, Japanese yen. Not a massive fan of what's going on. US dollar CAD. As you can see, US dollar CAD was a trade idea I had, and I was really impressed with and really wanted to trade. And I'm going to actually run you through exactly why I didn't trade it, and it's all because my strategy didn't get connected. But if you have a look here, Luciano, give me 1 sec, I'll have a look back on it, and Stephen too, I'll have a look on that as well. We were in this channel for so long, we bounced off the top, and then we produced this little push here. And as we push lower there, you can see the rally that we had there of bearish power. You can see the power in that move that is generated right there. And then it come back up into this area, broke one trend line, it had the other, and I was just looking for a lower low. If I could get a lower low on this dotted line, I was shorting this with all my mouth. I fully believed that this was going short. And then it was around, I think it was literally like here, war broke out. That is when the war broke out. As you can see, it just rallied. So I'm glad it didn't. I had this dotted line set here, and I actually had a pending order set on my. Does this show pending orders? Shows orders. US dollar CAD, as you can see, are pending orders, and they were cancelled. Just under here of where I wanted to short, but it never got under there. So it rallied with the war, and I'm happy it rallied prior to giving me an entry point, because otherwise that definitely would have stopped me out, and I would have been full risk on that trade too, because I was quite happy with that one. Same thing here. We need a pullback up there for Aussie dollar. Aussie New Zealand's not really doing much. We had to, not Aussie CAD. Stevens asked for Aussie CAD shorts. Aussie CAD shorts. I was looking at this, okay? Now, realistically, my Aussie CAD short would be here, all the way up here. However, we do have this kind of area right here where we could see a bounce. And if anything, on the 4 hour, you can see this might be an area we've got to push down and pull back. So we could short from here, technically. Not something I want to do, but we definitely could short from here. It would fall within a trading plan. However, I think majority of the power, the selling power, is up here. And I'd ideally like to get up here prior to, it's a bit messy. There's too many wicks. There's too much going on. While there is a structure break, you are correct. It's not screaming at me, and if it's not screaming at me, I'm not going to trade it. Essentially, so. But it is a good spot. Aussie dollar Swiss franc missed a beautiful little entry potential here. As you can see, we had the large push up, the strong arches pullback into the area. Set a higher high on the, where am I doing here? Set a higher high on the 15-minute. Sat here a little bit, still sitting here. We could probably even get close to the same entry point if I wanted to. I'm not going to. And now a push higher. So I think we can see Swiss franc coming up to these highs, if not going further. I think there's going to be a bit of strength in the Aussie dollar, to be honest. I think there's going to be a lot of money, depending on how this war goes and if other people get involved. A lot of people are focusing on how this war's breaking out. Like, this leaves it open, pure speculation. But like the China-Taiwan situation, is that going to go ahead now? Like, do they see that as a good opportunity? We know that they've kind of been doing the same thing that Russia's doing with the massive troops and kind of pressuring Taiwan. Could that happen? Maybe. So there's a lot of different moving parts. If that does happen, I think the whole Asian region will have a slump. But with no war here currently, I think a lot of people might be looking towards Asia, especially the Japanese yen, as kind of like a place to put your money. I saw like Japanese stocks have been rallying over the past like couple of weeks when different things are happening like this. People like the Japanese yen stocks, or the Japanese stocks. So we'll see. I think Aussie dollar can bring in some strength in the future, but we'll keep an eye on it. Aussie dollar Japanese yen. I think we were talking about this before, no? Yeah, we were. This was the one. You got an entry at 83.85. According to my chart, we didn't get that high. Unless you shorted all over here. We didn't get quite that high. So I'm not sure where your entry was or what you saw. Oh, you trade the whole 1, 2, 3 wicks thing, right? Yeah, that's only 1, 2. We'll see. We'll see. Switch break with filter. Yes, that's right, Stephen. Harman says, do you think interest in gold will help the Aussie dollar? Well, yeah. I mean, we produce a lot of gold with our mining sector. But will the interest remain in gold? Now that we've gone through the uncertain time, will the interest remain in gold? And that's what we have to decipher. Will people still be flooding to gold now that they know what's happening and where the money's flowing and where everything's unfolding? That's what you need to ask, I guess. You find synchrony for demand zones across all these timeframes. Do you know the demand zone on 15-minute will not drop further if the 4-hour seems to point down bearish? So it's like a top down. So I'll look for supply and demand solely on the 4-hour. I think the higher time frame, especially when it comes to supply and demand zones, the more orders you're going to get and the more power it's going to have. And then I look for chart patterns and price action patterns on the smaller time frame. So supply and demand and market structure on the 4-hour, and I dive into the smaller time frames to find entry points through price action. But yeah, essentially, simply what agreement are you confirming between this time frame? Yeah, so I'm trading the 4-hour. That's what I trade. I trade the 4-hour time frame, and I jump into the lower time frames to find my entry points, and just to find confirmation that I am right, that the buying power is there in the way that I want it to be there as well. You were looking at that level. Sorry, I thought you meant like you got in at that price. I was like, I don't think we got that high. Okay, you were looking at that area. Yeah, right. Okay, US dollar Swiss franc looks like an arches pattern. Did I already look at that? No, we'll get down to... No, have I? I was looking long here, Stephen, as kind of a push up, high, come down, touch the demand, and then a run higher. I'm not looking for a short there, even though we did break a higher high. If I start looking at here, I'm going to start trading the daily time frame. Like I'm going a bit further out than what I want to have a look at. But you could find it, I guess. You could find an arches pullback in there. But yeah, it's not something I'm going to look for. Right. Okay. It makes sense, Lucian. Makes sense. All right. Where were we? Swiss franc, Japanese yen. Trading the zone, wicked out. Nice liquidity grab out of the zone and then a push back inside. I think that's still going to range trade for a little bit. If we get up here, though, and we're on our way, definitely, we'll be looking for shorts there. Why? Because this is one of the clearest structure breaks we could have right there. That was our lower low. We had a massive structure break with power. Yes, the invasion has something to do with that, but price action is still price action. We've had a massive structure break, and now we're having a bit of an arches pullback, Stephen, as you say, into this area. I think we can definitely see this price head lower. Keep an eye on it. I'm going to be marked on my watch list. I think if we get up into this price action area, we can start looking on the lower time frames to try and find some short. Exactly. Euro Aussie dollar. Wow. I mean, that's just a consistent move. It's like, yeah. I mean, look at that 4-hour chart. It's quite amazing, really. That just kept going and going and going. I'm not trading that. I can tell you right now, I'm not trading it. I don't want it. It's not worth my time. Euro Swiss franc's an interesting one because we have broke a lower low, and then we could pull back up into this area. But the thing is, we're already in a downtrend, so I like it when the trend changes. And already being in a downtrend, while we could, if price came like up in this area, still under this trend line, push lower. It's not something I'm really going to be watching. It's if we break up this, then I'll be looking down here to buy because they're the strongest movements. The trend changing movements are the ones I want to trade. So worth a watch. I think if we get up to this area, you can look for short opportunities, but not something I'm going to trade. Same with Euro Japanese yen, same setup. Euro New Zealand doing the same as Euro Aussie dollar. Euro CAD just broke a flag pattern. But once again, we're already in a bit of a downtrend, so I'm not going to look. If you look trading the daily chart, you probably see something like this. If I jumped over on the daily for you, what did we have? We had a push. Oh, it didn't break a higher high. Unless you consider that. How many candles we got? 1, 2, 3, 4, 5. Yeah, that's a break a higher high. Yep. So if we come down here, which we're already pretty much there, could look on the 4 hour or the 1 hour to go long. Not a trend, not a time frame I trade, but if you are a swing trader, could start seeing some strength in the Euro CAD pair. Maybe. Let's jump back over to the 4 hour here. That's a 3 hour. Nope. Oh. That's an interesting one. Great British Pound, Japanese Yen. I mean, it touched that demand zone daily. Once again, daily chart. Touched that demand zone so nicely. Look at this little bounce. Let's see if you had come back down, maybe a double bottom, could look to go long. But I don't know if I want to long the pound right now. Something to figure out, something to have a look at. Nothing here is grabbing me. I'll just quickly go through these ones so we can start having more of a chat. We looked at that. Yeah, we already traded that. Yeah, definitely could have held on a lot longer. I set my target there early, but we definitely could have been looking to move that further. But I didn't exactly expect Russia to go in, to be honest. I didn't know all the information pointed towards it. I just really thought humanity was past the point of such large conflict in Europe, but apparently not. Maybe, Stephen. Maybe. Great Britain, New Zealand, doing the same as Euro New Zealand. Didn't break a lower low on New Zealand dollar CAD, but it was close. I'll keep a close eye on it. If it can break this lower low, I definitely think we can start looking for a pullback and a short. Keep an eye on it. New Zealand dollar Swiss franc broke a higher high. We're pulling back into the demand zone. We tapped the demand zone right here. We tapped in there, then broke a higher high. How much room do we have? All right. We might have a trade opportunity here. You was benched today? What do you mean? You were looking at Great British Pound whopping 200 something pips in a day. I'll have a look in a second. We might have a trade idea here. Now we have broken higher highs after touching. Ideally, the entry point would have been around here. We have missed it. If we can pull down into that area, I think we can actually look to go long on New Zealand dollar Swiss franc. Something along the lines of this. A target maybe up here. So we could, if we wanted to, aim up here, but I just don't think we're going to get that high. I think we might sit in this area, maybe even just retrace back into this original zone here. And if we get up to the top side of this zone, I reckon we're looking there. That's 3R. I'd be happy with 3R. I think this is something we're looking at. I definitely think it's something that may unfold. Go a little bit lighter. There we go. I definitely think it's something that may unfold. So keep an eye on that. That's going to be ticked on my watch list. Keep an eye on New Zealand dollar Swiss franc. Strong push up, structure break. Thing is, we were in an uptrend, but also in a downtrend. So hit and miss. Sorry, I'm getting distracted with my own analysis there. New Zealand dollar, Japanese yen, same thing. Very much the same thing. Push up, come down. New Zealand dollar is showing strength. I said the Aussie dollars, apart from against the US dollar, the Asian Aussie dollars, the New Zealand dollar, I think we're going to see a bit of strength coming into the future, but we'll see. We'll see how it unfolds. And then finally, gold, I'm not touching because that's going to be a little bit crazy. And same with silver. I think silver's doing the exact same thing as gold. So that is my analysis done. All right, my charts are set. We've got 3 on the watch list. Now, obviously, I'm not going to trade any today because we're moving into the weekend, and I don't want to risk it gapping over the weekend. But that is my analysis done. That is all the charts I've analyzed. I think it can be time to go long the S&P 500. Oh, here we go. King Dom says, Jordan, what's the best advice you could give to a new trader on how to profit and also become a master? I was a stockbroker for a long time, but never traded a single share or currency. My apologies for being off topic. Never apologize. This is good. I'm happy that you're asking questions like this because it's a place to ask questions like this. Imagine, okay, when you get into trading, as fun and as addicting it can be, you must treat it like a business. Okay, so imagine you're just launching a new cafe, right? Every piece of revenue, your losses, your commissions, everything should be documenting. Every piece of profit should be documented. But then also how your different products are doing should be documented. Do you sell a lot of almond milk with your coffees? Do you sell a lot of muffins? Do you sell egg and bacon sandwiches? You know what I mean? And you document all that to know whether you're wasting your time selling the egg and bacon sandwiches, whether it's not making money, or whether you should put more money into advertising the almond milk coffees because that's your main selling point. Same with trading. As you're trading, the certain setups you're trading, you should be documenting. So over 100 trades, you can look back and you can go, okay, I'm wasting my time doing that. It's not worth, the stress that's putting on the system. It's not actually generating anything. I can remove that. Or this strategy and these entries are almost perfect. Maybe I should just focus on trading that. Because when you're a newbie in trading, it can be so difficult because there's so many different aspects you need to learn, from the psychological side to the technical side to the fundamental side, and then everything thrown all in one, that it can be overwhelming and really disheartening. And all over the market, everywhere you look for help when trading, everyone points you back to the charts to do technical analysis. And while technical analysis is a large part of it, majority of where traders fail and majority of where, and you'll hear me say this every week, majority of where everyone gives up is when their mental side gives up. And it's because they're not going about it properly. They're not treating their trading like a business. They're not documenting everything. They're not giving annual reports or monthly reports to themselves, which you need to do. You need to do staff reviews. If you've ever worked in a large business or anything, or a well-run business, your boss might have called you in to do a performance review, and you sit down and you'd be like, how do you talk about your performance and how you feel and what you can improve on and different things like that. Same thing. You got to sit down with yourself and do a performance review. Am I making the right decisions? Am I listening to, am I dealing with FOMO and just listening to whatever he puts in the Discord and then trading his setups? That's a massive no. But there's no way of correcting that unless you're doing a performance review and you have the data to back it up. Without data, you're just winging it. So the advice I'd give you is treat it like a business. Document everything you're doing, how it makes you feel, everything like that, ways you can improve, ways you think you can improve, and then test whether that's actually an effective way to improve. And then also find someone to hold you accountable. Find someone, maybe another trader, maybe a mentor, someone that can sit down and go, dude, what are you doing when you make mistakes? So they can correct it. Preferably someone with the knowledge to be able to correct that, to actually help you, but having that accountability is big as well. So that's my advice. Sorry if that was a bit confusing, but it's a very tough question being in such a wide, area that we have. Are you guys planning to add trading view to platforms anytime soon? Probably not. Probably not. We're not a broker nor a retail broker, but we wouldn't really make any money. The way that everything's set up with TradingView and then executing orders through TradingView and stuff, it's set up for retail brokers as a trading platform. That's it would just cost us a lot of money, and it wouldn't be very good for the business. Why not place pending orders at support levels and demand levels and forget? I tried for several pairs and lost. That's what I mean. To trade in the now and don't think. Why not place pending orders at support levels and demand levels and forget? Like, you're asking me why I don't do that? I tried for several pairs and lost. Well, I think you just answered the same question. Is that what it means to trade in the now and don't trade what you think? But sorry, I'm really sorry. Can you explain on the question there? That's really baffled me on what it is you're asking for. Apologies for the misunderstanding. Kingdom says, thank you, I appreciate this. Looking for strategies has been tough. Yeah, it has, and that's the thing. Like, you've probably already traded like 4 different profitable strategies. You've just not traded it right and consistently, and that's the big thing. A lot of people get consistent, which is an issue. So, do you use a trade copier to trade your personal accounts with 5% account? No, they're traded separately. I don't take the while sometimes the same setups. No, I don't use a trade copier. Sure, can we use EAs to export from TradingView to MT5? Oh, okay. I don't think so. Unless you use a trade copier from an TradingView account that you have to MT5, but I'm not even sure if that's a thing. Maybe, but I'm not sure. It seems you are not trading particular setups. You select all moves. I dissect all moves. Yeah. Well, I have a setup, an exact trading plan of what I look for. It's just I've traded it for so long that I know, like from a blink of an eye, I know whether it's an opportunity or not. If it's not an opportunity, I just discard it. That I know what I'm looking for. It is a strategic plan, and it is an edge, and it is set up to how I like to trade. But it is like one particular setup, and on every pair, while it may look different, it is the same setup that I keep trading. Yeah, Joel. Sorry, no, I don't use a trade copier. I trade on my personal accounts a little bit differently, depending on different assets and stuff like that as well. But no, not trade copier. Hi, there are some more questions in the Discord chat. Okay. Discord chat. Oh wow. Okay. Oh yeah. Before. I noticed we still have a Swiss franc warning banner on the dashboard. Will you guys be looking at bringing the margin requirements back to normal soon? Also, would you be able to touch on your thoughts on the indices might start to reverse now certainty is coming back? Great question. Swiss franc warning is still there for the time being. Sol is actually, I'm not sure if you changed that. I think the Swiss franc is still gonna be marginalized for the time being, especially getting even more uncertain now. We need to make sure they can maintain their peg. But I'll check with the risk management team to see if they plan on changing that anytime soon. With the indices, I definitely think they will start to reverse. I think they'll start moving towards the top side. I do. I think over the next couple months we're going to see the indices rally. And I'm not a huge rally, like not like it's going to blow up like, oh my god, we're going to make heaps of money. But I think we'll slowly turn and start trending to the upside on the indices, depending on the certain indices. But yes, I do believe that's where we're going to head. Thanks for the question, by the way. I really appreciate it, and thank you for Mr. Callow DJ for letting me know, or Khaled J. Last week we talked about trading. Yes, we did. Yes, I will do that. I won't be doing a session next week. I won't be able to do a session next week, a live session. I'm going to be away. But the week coming back, I'll dedicate a full live session like this to trading journals. And I'm also going to change maybe the 5%ers one that we have. I'm going to produce another one too. So there's a few things I'm working out. I did wanted to do that today, and I was planning to do that today, but then Russia started war, so that kind of changed the plans a little bit. But yes, I know, Joel, you wanted it too. Sorry for the delay. It is coming, and I will run you through exactly how I do all that. It's just going to be a little bit longer with how everything's gone on how I do it. And I'm also they're very in depth and a little bit crazy that not everyone's going to be able to understand everything that's going in. So I'm just creating the right way of explaining it all. So we can sit here for an hour and we can talk over it and talk through it thoroughly, so you can understand exactly what it is I'm recording and why it is I'm recording that, and then also run back into how it helps you. So it's going to be a very in-depth thing. It's not going to be something we can run over for 10 minutes. It'll be a very long process in explaining that, which will benefit you because it's benefited me after years of trading. But it is something that's going to take a bit of time, unfortunately. And I was planning on doing it today, but once you saw, I mean, look at the news at the moment. I think it would have been, we saw Ruben yesterday did a emergency live trading room. I think it was fair enough that today we needed to address what was happening in the world and how the markets were reacting. And I also wanted to add my 2 cents for you guys too. And it says, what's the art of placing pending orders using supply and demand areas as you use it? I imagine that price might blow out of the supply area sometimes and result in lost trades. I think, I'm trying to get an understanding here, that you were talking about my US dollar CAD trade. And that was the only one where I really use pending orders. And the reason I did do a pending order was because I was leaving the house. So I placed a pending order under this low and then moved it onto this low as it was going. And then I was leaving the house, leaving the charts. So I left it there and then I had it on my phone. So if, as I was driving, it hit it, it would still get me. And then the moment I seen it pushing up here, I cancelled that order. I think that's what I don't usually use pending orders. I usually use market orders and trade like that. But yeah, I'm assuming that's what you're talking to. Today was great. Thank you. Thanks very much for being here, Horton. We are coming to the end. So if anyone does have any questions, fire away. Now's your opportunity. I won't be here next week. So if you do have any questions, ask now. I won't be here next week. I'm going to be away next week. And then we'll be coming back the following week to dive in and have a look at everything that's gone on, plus the trading journal and everything that my journal process that's helped me over the years too. So last chance, any questions, get them out on the table now, and then we're going to give my voice box a rest. Actually, while we're not looking at the charts, I can make myself large again. Talk about total percentage of portfolio to be risk at the time and risk per trade. Tough question. Depends on the account you're trading. Depends on your risk analysis, your risk approach, and depends on what you can handle. So if you've got a $100,000 account and you go, yeah, I'm going to risk 1% per trade, then sure, go ahead. But are you really going to be able to handle losing $1,000 every trade? You know what I mean? That's are you going to be able to handle that? We can sit here and say, yeah, for sure. But when you see that running P&L go $900 down, are you going to be able to handle that? So it's all a matter of what you can handle. And then also, if you're trading on a 5%ers account where we have maximum drawdowns and equity stop outs, how many trades in a row do you have to get wrong in order to stop you out? If you're trading 1% per trade, that's just 4 consecutive losses and you've lost your whole account. Then you look at your strategy, how many consecutive losses have I had in the past? If it's 15, then okay, I'm going to give myself a buffer of 20 or 25 and then divide that risk that. It's simple mathematics to have a look at what your best risk approach is. Thank you, Jordan. No worries, Joel. I've an absolute pleasure having you in here as always. It's great to speak to you. The students have got it. No questions from me, but I'm looking forward to hearing about the trading journal process. Awesome, mate. I look forward to sharing that with you guys. All right, we're going to call it here. I'm going to go take a rest. I hope you guys enjoyed today. Stay safe in the market. I am full risk on, looking back at trading, so it's up to you whether you do the same, but that is what I'm doing. Take care, guys. Enjoy your weekend. Take a break from the charts. Go spend some time with your family in this crazy time that we have unfolding before us. And yeah, I'll speak to you guys in the Discord next week. Take care, guys. Enjoy it.